All right. Welcome back, everybody. And thanks for coming in. Let me go ahead and just get this thing squared away. Thanks for coming back to our next tutorial, which is going through a live example. It's, in fact, going through more of a live, answering a question from a student that actually just came up this morning in our live trading classes on cross pairs. So we're going to go through a live example on cross pairs, and just a kind of an easy way to look at them and an easy way to analyze them. And when looking for trade opportunities, weighing the pros and cons of when we should trade, let's say, a major pair like a dollar-based pair, and when we should trade a cross pair. So first things first, I thought I would share, this is what we write out every day. Whenever we're going through trade opportunities, we'll often show, okay, you know, what different trades we're looking for that day, and sometimes we'll base it into what we call dollar weakness, dollar strength, meaning we may have a strategy for trading into dollar weakness, we may have a strategy for trading into dollar strength, and then we may have a strategy for trading a dollar neutral position, which would be a cross pair position. So I'm just going to go through this and just show you one of our trading scenarios today was for trading dollar weakness, where we wanted to sell the dollar yen if it broke down through a key level of 109 and also broke down through a trend line. So that was situation number one, if you will. And then situation number two, one of the other trades we were looking for, these are just separate trade opportunities, is we were looking to possibly go into a dollar strength position if the euro dollar was to break the 113 level, which is where it found support overnight. And today is April 13th, 2016, if you're looking at your charts, and it's currently 11:30 a.m. Eastern time. My class was from 9 a.m. Eastern to 10 a.m. Eastern when we discussed these trades. So we had a strategy for dollar weakness, a strategy for dollar strength, and then right at the end of class, one of my students, one of my best students, actually, one of my favorites, came and said, "Steve, can we look at the euro-yen pair?" He was looking at a chart on it, and he said, "It seems to be breaking through a trend line. Can we take a look at euro-yen?" Now, mind you, I already had strategies up here for trading the euro-dollar, and I already had strategies for trading the dollar-yen. So when he's saying, can we look at the euro-yen pair, he was wanting us to look at that from the basis of, hey, this is also showing us a technical breakout, which tends to be what traders do. They just look at different charts, and they'll see different setups start to happen. And it's not trading blind. It's just kind of trading more technical without knowing what's driving the market. So I'm going to go through the basics of how I explain this to them in weighing the pros and cons of which currency to trade. So let's take off all these. We'll take off pound dollar, we'll take off dollar Swiss, dollar CAD, Aussie, and we'll tile these three windows together. I have the euro dollar, I have the dollar yen, and I have New Zealand right over in here, which we don't want. We want the euro yen pair. So we go through a lot more details of this. We do this over and over again in my classes, but first things first, though, we'll go through and just kind of show you, here was the break that we were looking for through the 113 level right down in here on the euro dollar pair. Here's the 109 level up in here on the dollar yen. Here's the 109 level. And this was our dollar strength. This was our dollar strength transaction where we were looking to sell the euro dollar. So I'll go ahead and put that on there. So, oops. Okay. So that's where we were looking to sell the euro dollar, and we were looking to sell dollar yen right down in here. And the question that came up from a student right in here on euro yen, where he was asking about the euro yen, was he basically just said, you know what, the euro yen looks like it's breaking down through a trend line. Would this be a good sell opportunity for breaking through this trend line? Now we're going to talk this through because we may not even go back to the Word document there because we want to talk this through. That's the only way to really get things across to people. So we were looking to trade into dollar strength. Remember, euro dollar times dollar yen will equal out into this euro yen transaction. So this transaction over here, where the student said, should we go ahead and take a sell? It's breaking down through a trend line. It looks like it's breaking through to lower lows. Would it be a good idea to go short on euro yen? And I want you to think about this for a second. We were already looking to short the dollar yen if it broke through 109. So that would have been short dollar. We were looking to go short dollar. Let me bring this up. We were looking to go short USD, long JPY. Should it break through that level? Which you can clearly see it did not. It did not break through that 109 level. Over here, we were looking for a strategy. Let me go ahead and delete that real quick. Over here, our strategy was composed of going short euro, long the US dollar. Now, if we are short over here, if we were to look at shorting this euro yen right over in here, essentially we'd be short euro, long USD, short dollar, long JPY. Just like we went through in our PowerPoint earlier. Remember, long and short the dollar means we're short euro, long yen. So here's how we would weigh the pros and cons of this. Okay, I do see this euro yen is breaking down, but what would be the better idea here? What's causing this breakdown in the euro yen when it did break down on this breakdown below this? There was a nice little trend line that was right in through here that it was breaking down below. So it's breaking down. So what's causing it? What do you think? At the time this was happening, the yen was finding support there at the 109 level. We didn't want to short dollar yen unless it broke through the 109 level. At the same time that he was asking that question, the euro started to break down below 113. What do you think is causing this breakdown on the euro yen? If euro dollar times dollar yen equals euro yen, what is driving this breakdown in the euro yen pair? Well, look what's happened to the yen. The yen's come back up. It's starting to kind of go sideways. These are going in opposite directions. The same trade that we had in class to go short on the euro dollar is what's driving this breakdown in the euro yen. This euro making a large precipitous move back down below this 113 level is what's causing this large breakdown in the euro yen pair. We already had a strategy to where we'd look to short the euro if it were to break down through that level. So the question became, so when would we look for shorting that euro yen pair? Well, you could see one trade executed. So this executed to go short the euro dollar. We also had a trade to go short dollar yen if it were to break through this 109 level. So when would it be appropriate to sell into that euro yen breakdown? Well, if the yen was breaking down through this key support level at 109, that would make us enter into that short dollar yen position. The euro dollar broke down below 113. That made us short the euro dollar. If at the same time that this breakdown was occurring in euro yen, and we were also getting a breakdown for our short signal on dollar yen and our short signal on euro dollar, which didn't happen, the dollar yen never happened, that never executed, then that would make it easier for us to say, you know what, I'm getting a sell signal on euro dollar, I'm getting a sell signal on dollar yen. That's when it would make sense to go short on euro yen, in my opinion. And that's what I told him. I said that's when this trade would make sense to me. Is, why not short euro yen? If we are already looking to short euro dollar, short euro, long dollar, and short dollar yen in the same day, short dollar, long yen, why wouldn't we just trade the euro yen? Well, in that case, that would be no problem at all, because essentially you're in the same position. You're looking for dollar yen to go down. You're looking for euro dollar to go down. You'd also be looking for euro yen to go down, and it was breaking through a key level. But in this case, I said, the proper thing to do here, and think this through in your mind as a trader, and I know this can be, it often takes some repetition of going through this, but in this case it wasn't necessary. the true signal here, what caused that breakdown in euro yen, was the euro dollar transaction. So what would have been the better trade? At the time, this was right down here when he was asking that question. It was right down in here. Euro dollar has gone further down since then. It still continues going down. Dollar yen is going up. That's causing the euro yen to go sideways. So the proper thing to do there is, no, instead of going short euro yen, we should probably just stick with what caused that breakdown to begin with, and just stick with shorting our euro dollar position, because the yen's not breaking through that key support level, so it's not really confirming that cross pair transaction. If we did get the breakdown on both those pairs, then why not trade euro yen? It's the same. It would be the same transaction. We'd be looking for both these pairs to go down. Now the interesting thing is, if you look at what happened in the overnight hours, look at this euro yen pair right in through here. Now this is where people can go wrong, is you can kind of see, and I'm just looking, you see all this back and forth action with the euro yen just going sideways? It's not doing anything. What's causing this? What's causing all this movement sideways, the sporadic, this movement just to go totally sideways? Well, during this time right in through here on our charts, this was in the overnight hours. Let's see, that's at 0100 hours. This is, let's just put this at 1200 hours. There we go. And I'll try to put these vertical lines at the same time so you can kind of focus in on them. I'll just go here. So you see all this movement in here where it's just whipsawing back and forth, going sideways here on euro yen. Well, what caused that sideways type of market action? Here, I'll take off this trend line so you don't get confused here. So what's causing all this sideways market action? What was happening at the same time when you look at the direction of where did dollar yen go during that same time from 0100 out to 1200? The dollar yen was going up, so the dollar was getting stronger and the yen was getting weaker, right? What was happening with the euro dollar at the same time? From here to here, the euro was getting weaker and the dollar was getting stronger. So in this case, the dollar's strong on this chart and the euro is weak. The dollar's strong on this chart and the yen is weak. So what should euro yen be doing during that same time? It should be going sideways. This is a case where the dollar, and here, let me just, I'll delete some of these little things in here. We'll just take this into just a blank screen here. Just focus in on just the horizontal lines. And this is what I do quite a bit with my students right in through here. So right in here, when this is going sideways, you got the dollar strong, euro weak. You got the dollar strong, yen weak. So the euro's weak here, the yen's weak here versus the dollar. The dollar's driving the price action during that time. And what's euro yen doing? It's going sideways. And that is probably about as good of a snapshot as you can have when it comes to when to and when to not trade a cross pair. You don't want to be trading this little sideways action. You want to be trading this, or you don't want to be trading into the prevailing trends in the market. And this is during a time when the dollars, you can see, does anybody want to trade this stuff in here? No. So when the question comes up, Steve, when should I trade a cross pair? Well, when this is not happening, when this euro dollar and dollar yen aren't going in the same direction. That's considered the same direction, by the way. Dollar strength. When the dollar's not driving price action in the market is when you want to be, is the ideal time to trade a cross pair, because you can see here on euro yen, it's not doing anything. It's going sideways. If you went long or short on euro yen there, you're basically just taking the same trade in the same direction. You're just trading sideways whipsaw movements, and you're at the mercy of whichever one of these is getting weaker versus the dollar. if we wanted to, what I would suggest that you do, for those of you at home listening to this, is to go through and just look at these charts, and they will start making sense to you. For example, that Aussie yen that I showed you, I actually updated the PowerPoint overnight to show you that Aussie yen, the PowerPoint, because you can see here, this is the Aussie dollar. The Aussie dollar has since been breaking down here, and you can see the Aussie yen. So here's Aussie dollar, dollar yen, and Aussie yen. This is the same thing from the PowerPoint. This is the ideal time to trade a cross pair. Aussie is strong, the dollar's weak. The dollar's strong, the yen is weak. So you got Aussie strong, yen weak. And look at this Aussie yen pair. This thing shoots up roughly 300 pips from its low to its high. And that's where you get the most bang for your buck for trading cross pairs, is when you get those two separate currency pairs both going in opposite directions against the dollar. In this case, the Aussie's getting stronger versus the dollar. The yen is getting weaker versus the dollar, which is creating a nice precipitous move on the Aussie yen pair, straight up essentially. And as you see, Aussie's breaking down, yen started to break down, and now you're getting more of that sideways action on your cross pairs. So the key takeaway from this, and the reason why we generally start off when we're doing our comparison analysis by looking at the dollar, is because it's not necessary to go sifting through all those cross pair charts sometimes. You know, quite often you'll know what's happening with the cross pairs just by looking at the dollar pairs. So I hope you enjoyed this little live example here of us going through a kind of some live analysis of cross pairs. We do this quite a bit in my classes, and those of you that are listening are probably my students already. And it really does make the market smaller to where you don't feel like you have to look at 50 billion different charts in the Forex market. You can start with the basics of just looking at the dollar, and then you can make decisions based on your own personal probability of success by just using common sense of when to trade cross pairs and when not to. So I hope you enjoyed it. I want to thank you for coming in, and I will see you in the next tutorial. Bye-bye.